Couple ways we could have looked at today's price action. So this is NQ. This is the 5-minute time frame. This is going to be the opening candle here, right? So opening candle is going to be here. This is the pre-market session lows there. So a couple of ways you could have looked at it, right? From, a pattern standpoint, a price action standpoint, if this is our pre-market high, this is our pre-market low, we could have taken the break here down, use a 1-bar stop here, ridden this into the 200 SMA. Okay, that's one. If we're just solely looking for 20 plays, the first 20 play didn't even come for about an hour and 15 minutes off the bell, was here long, would have gotten trapped out here for a loss, as it would have stopped you out somewhere in there. But one thing that I kind of want to point out here is, if we look at the price action, even from pre-market, we are trading below the 20 SMA. Okay, so if we're trading below the 20 SMA and we're above the 200, it's kind of trapped in a little bit of a range. Look at the first initial move down, then look at the back test here at the 20 SMA. Okay, as soon as you see us start to get, rejected here, one thing that you could have done in the clear setup that kind of really sticks out to me, even though it's not a 20 play, is if this was the first initial drop, I'm going to mark out these lows. I'm going to let it bounce. I'm going to let it get rejected. And then what I want to do is take this candle short. Why do I want to take that candle short? Because that would be confirming the low of day. Okay. In that particular scalp, your entry would have been somewhere around 14,998, and it dropped all the way down to 14,975. So this is about a 15-20 point drop in a matter of 5 minutes. This would have been a one and done trade on the day. So again, anytime we're trading below the 5-minute 20 SMA and you're not getting any setups, don't force anything. Just sit there and either wait for the first setup or look at the low of day and see where that's correlating with the 200. Now, minus this trade here that would have gotten stopped out long, the reason why I probably would have not taken this trade is because we've already put in an extended down move, right? So the trend on the day is down, okay? Trend on the day is down. So this is just nothing more than a dead cat bounce. A dead cat bounce just means we got an upwards move, right? We're getting an upwards move in a downtrend, okay? So downtrend, upwards move. Why I'm not going to take this long setup per se is due to the fact that it would need to clear this out. Look at this high, look at this high. We never took it out. So in this particular situation, I'm already going to know that the first drop here bounced here, got rejected. Second drop bounced here, got rejected. This is what's called a double top. It topped here once, it topped here twice. Now you get the break down. And as we're bouncing back up, I'm not going to take this because I'm in fear of another drop, right? So what would need to happen in this particular situation? The price action would need to break above this high and put in a little bit of a high, pulled back to back test, consolidate, and then push off higher. Then we're going to go long here, okay? So that's essentially what we're going to go long on that second wave higher. Now, if we look at this 20 play that's set up here, we've already identified what? We're in a downtrend, right? So trend is down, okay? Trend is down. What we're looking at is this level of resistance here. And then I would be interested in taking this short position when it confirms here. Yes, you have to sit through a little bit of pain, a little bit of drawdown, make sure you're sized appropriately, but there's a rejection spot there and then it flushes, okay? Now, if you were to get out of this trade, you would have gotten out of this trade prematurely. So essentially you should have been in the trade here, or excuse me, reason why here, been in the trade here. But let's say, for example, you weren't on the charts or you didn't see it. You got another 20 play that's set up here, confirmed, and then proceeded to drop. So realistically, we shouldn't have been getting chopped up. A little bit of a different view if we look at the 2-minute, right? So again, stay off of the 1 minute. It's going to give you a heart attack. Just stay off the 1 minute. If you do feel like 5-minute moves too slow for you, go to the 2-minute. Okay, 2 minutes going to give you a little bit more time. But if we look at the 2-minute chart, it tells a little bit of a different story here. So again, the first 2-minute setup that happens literally happens right off the bell. So this is a 6:30 a.m. candle for me, Pacific Standard Time. Here's our pre-market highs. We come all the way down to the 2-minute 200. That's our pivot. We're looking to take this candle short, and then essentially you would have been able to take profits on the way down. Yes, we bounce. Again, where do we bounce to, right? Look at where we bounce. If this is the breakdown spot, this is our stop, this is our entry candle. As long as we stay below the 200 and below our breakdown spot, you stay in the trade, right? Boom. Take profits at the new low. Bounces again. Boom. Take profits on the new low. Bounces again. Boom. Take profits on the new low. So again, sit patient. Again, here's another 20 setup here on the 2 minute that goes. This one never confirms. Here's another 20 play on the 2 minute that sets up consolidation and then flush. Okay. Long setup here would have gotten stopped out. Short setup here. Maybe you could have made a little bit of money. Essentially very, very choppy. I would stick to trading the first 2 hours of the market as well. Between 6:30 a.m. Pacific Standard Time and around 9:30 a.m. Again, that's going to be this block here. This is where I make my bread and butter. I don't really make anything towards the end of the day. Hope this video helps.